Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. I'm a Senior Account Manager with AvaTrade. As we get going, let's do a quick systems check. If you would, just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, I've got enough responses. Looks like we're up and running fine. Thank you very much. If anyone runs into any issues as we go along, please just let me know. So fundamentally, obviously that's what we're looking at this evening or this afternoon, depending on where you are. There's some driving storylines that I think we probably all have seen and that are kind of moving the markets, and we'll talk a little bit about the details about maybe some specifics of how some assets are responding a little differently than others. And it's related strongly to the pandemic and the way the economy was functioning with some of the tech stocks during lockdowns and the reliance on certain companies during the lockdowns. And as economies are opening up and as the vaccine is expected to be released, there's a shift in terms of where the focus of investment is right now. And we'll take a look at fundamentally how that's driving different indices, different stocks, etc. So as we move along, keep in mind, as always, we should understand that all investments have risk. No one trade is guaranteed to bring you profits, which is why you should have some sort of risk management plan going into each trade that you take so that you can understand the amount you're exposing either to your stop loss or to where a hedge trade might kick in, or maybe you're using a feature like AvaProtect, which protects against any losses during defined time periods. By the way, that feature can be found on our web trader platform and the AvaTrade Go mobile app. For a small premium cost, you can protect against losses for defined time periods for a small cost when you first open the trade, and unlimited coverage for those defined time periods. And so it's a nice way when you're trading on gold, silver, FX pairings to manage risk, along with the other methods that you might be used to with the stop loss and hedge trades and such. As we go forward, keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. And obviously we talked about risk, but also there's the good potential for profit on each and every trade, which is why we're all here. And so we'll get into some moves that we think have good potential for movement today and moving forward, so you can go after those profits that obviously we're all looking to make. So, and yes, some of you are asking, we will go over the AvaProtect feature. I'll show that to you all, Mark, so you'll be able to have an upfront look at that during the webinar. Someone's saying that they can't hear me, so let me just let Samuel know it's him. Okay, so in general, those of you that are new to trading, keep in mind that these webinars are great for new traders to start building, and those of you who are veterans also understand that we get into strategies that are useful for everybody. Everyone can use a little extra information, a little extra strategy concept, ideas, and so the webinars really do move forward as an all-in-one webinar to help both veteran traders and beginners. Now, what we look at here when we talk about fundamental analysis, we started to talk already a little bit about the fundamental news, and really those things that I was mentioning would fall in the category of extraordinary economic events, because we didn't know that a vaccine was going to be released this week. Nobody knew that for sure, except maybe those developing it maybe knew when they were going to make that announcement. And that type of fundamental news obviously moves the markets. We saw it yesterday, we still see it today. And it's news you can prepare for with pending orders, especially buy stops and sell stop pending orders, just waiting for a big news story to break that will then cause really big movements. And had you had, sell stops set up for gold, buy stops on the major indices, you would have had huge payouts yesterday. Okay, and so it's just an example of extraordinary news being fundamental news that you don't know what it will be or when it will come, but you can still be prepared for it with pending orders just in case, to get in on those breakthrough moves where price levels that we can identify on the chart as being good support and resistance levels, when they get broken through, there tends to be momentum. Okay, and that's what we saw yesterday and really in a lot of the past webinars. And so the other type of fundamental news would be what we call regular economic events. And those would be, jobs numbers, factory production numbers, things that we know exactly what the announcement will be. We know when it is, exact time of the announcement, and what assets it's most directly expected to affect. Okay, and we'll take a look at some of those today out of Great Britain, European Union, which can give you some fundamental reasons to trade. If you're trading, say, EURGBP, you might have some preferences when we look at the fundamental news today that came in on those. And please feel free to ask questions at any time as we go along. Now, I mentioned the AvaTrade Go mobile app and the web trader platform and the unique feature for managing risk called AvaProtect. So for those of you that are new to things with AvaTrade, or those of you that are experienced traders but didn't know about these features, it's worth taking a quick look. So when you go to our trading platforms tab or link, you'll find AvaTrade Go, which is our mobile app, and that mobile app has a lot of nice features. It has AvaProtect, which we'll take a closer look at on the trading platform, the web trader, in a moment. But basically, it allows you to pick time periods for a small premium cost to protect against any and all losses during those time periods. It's available on gold, silver, and all FX pairings. Also, with the mobile app and the web trader platform, if you program a take profit or a stop loss price, it calculates for you in your account currency how much you're risking to that stop loss price with the trade size you have selected. It calculates for you your take profit amount with the trade size you have selected, all of it converted to your account currency. It's also telling you your margin that will be used if you open that trade. So all of this is told to you before you ever enter into your buy or sell position. So you can use it as a great risk management tool to manage risk with AvaProtect, also to help you understand your risk as you're managing risk by knowing what is my potential loss to my stop loss, what's my potential profit. And you can play with the trade size until the stop loss risk is what you want, until the take profit potential is what you want before you ever place the trade. So that way you don't accidentally get into something you don't understand. Now, in terms of the web trader platform, if you log in here, it'll take you to this platform, okay? The web trader platform. And the chart is nice. You can expand it. You can go full screen on the chart, okay? You can scroll in and out with your mouse to find price levels. I see resistance up here. I see support down here. So it's very easy to find those price levels. You can add indicators on and off the charts. All of they call them studies here, but you pick, there's the Arun oscillator. If I double click, it adds it here, and then I click save and it'll load it to the chart. Okay, so very simple. Now I have two indicators. So very useful, easy to use chart system. And let's say I want to trade on gold. So I pick a buy. Here's my AvaProtect. Now the AvaProtect only functions on the live account. Okay, so if you're using a demo, if you're new to things, maybe you didn't open a live account with us yet, AvaProtect won't work on the demo account, but you can see how it works here. Hassan, you should be seeing my screen. I think you need to expand something. Okay, everything's up and running fine. Obviously, your audio is working. Just find, you probably have a window you need to maximize, okay? Mark, good question. So AvaProtect does not show on the MT4 or MT5 platform because it's built by AvaTrade, okay? It's a special feature. It's the same account. This is trading over top of your MT4 or MT5 account. So it's the same account. So if you open the trade here, using AvaProtect, adding it on, you can then manage the trade from your MT4 platform. You'll see it. It's the same platform. It's the same account. You just have a different user interface with some nice features over top of the MT4 or MT5 platform. That's basically what this is. Same with the AvaTrade Go mobile app, okay? They trade on your MT4 and MT5 accounts. It's the same account, okay? Now, so if I choose, let's say I want to trade, I don't know, 10 ounces, okay, 0.1 lot, and I say, okay, I'm going to buy right now, and I want my stop loss to be, I don't know, down at 1860. Okay, fine. Well, here's how much I'm risking, $203. It calculated it for me immediately. I might look up and say, oh, I only have about 2,000 in my account. That's 10%. Maybe I don't want to risk that much, right? So then I lower the trade size. Okay, let me go to 5 ounces. Now I look and I say, okay, I'm risking 100. Now I'm only risking 5%. Maybe I'm okay with that. And I buy into it. But now I know my risk to my stop loss. It's telling me, calculated to my account currency. Here's how much I need to go to margin. It shows me right up front. If I choose AvaProtect, I can protect it by the hour if I'm a scalper, okay? I can protect it, 3 hours, 6 hours, 1 day, 2 days. So for longer term moves as well, I can have protection. That's not much cost, $58 right now with these volatile market conditions for 2 days protection. I could easily make a lot more than $58 the way gold moves in 2 days with 5 ounces, right? So you might find that the protection works for you with different strategies, different concepts. Yeah, exactly, Marius. You might not even need your stop loss programmed, at least not for the covered time period, okay? If after 1 day the trade's still running, but it's in the negative, when the coverage period ends, whatever negative floating is there gets added to your balance and the trade keeps running. You get the payment from the protection, trade keeps going. Then you could add your stop loss. Or you could add the stop loss right from the beginning and have the protection. It's up to you. Okay, so you could be down 1,000 on a move, the protection ends, the protection pays you 1,000, and then it goes back up 500. You close it at 500 loss on the actual trade, but overall you profited because you got 1,000 from the payment and you only lost 500 on the trade if it recovered some before you closed it. So it's a very nice feature. And if you get stopped out, the protection will pay you as well. If you get stopped out during the covered time period, whatever you lost, gets paid to your balance, okay? So it's a very nice feature, a nice tool to use for risk management. Now, since we're talking about fundamental analysis, the Web Trader platform, for those of you with live accounts, I don't know if you've noticed, look, we've got Trading Central here, which is a premium service. Usually you have to pay for Trading Central. Elvis, you can go back and watch each and every webinar. They're recorded. So if I'm going a little fast for you, you can go back and watch it, pause it, rewind on our YouTube channel. By tomorrow, tonight's session will be uploaded. Okay. I'm just giving you a quick preview of the platform a little bit before we get into our strategies and the fundamental news. But in general, you have nice features there, and you can play around with those features a bit on a demo account. Some of the features you need to have a live account, but you could still play around with them. Looks like we lost Elvis. Okay, Elvis has left the building, for any of you familiar with that phrase. Okay, so Trading Central has some nice fundamental news. You can pull up the economic calendar. Okay, you don't have to look at the economic calendar here, but it's nice that it's right there in front of you, right? And it shows the current results today, what's upcoming, some US announcements coming later today, and some other announcements that already came in. We also, in the Trading Central area, could look at like these analyst views. It really is like having live signals. So when this loads, what we see is that professional analysts from Trading Central have, on all of these different assets here, given you signals, telling you the strategy. They're looking at a potential breakout strategy here. They give you the scenario, entry point, exit point, support and resistance levels, everything, okay? Whichever asset you want. And so very nice feature there. And then there's more, market buzz. You can find news articles on what's popular today, what's trending. Obviously, Pfizer is trending. Our MT5 accounts, by the way, you can add an MT5 and an MT4 under the same user account from your client area. Obviously, Pfizer is buzzing right now in the news. So we click on that bubble and we say, wow, look at all the stories. Okay, you can start to read about what's happening with those assets. Wall Street mixed as vaccine hopes pull, all kinds of stories here. And so you can pick whatever asset you want. Okay, Amazon. Look how many articles about Amazon. Some of them will be older and some will be newer, but you can come in here and find Facebook. Okay, what's happening with Facebook. And so we can find the fundamental news, tech stocks retreat as investors sell stocks, sell tech stocks. So it says, you want to see the whole article? So we click on it. Here's our fundamental news. So, and I already pulled this article up over here, okay? NASDAQ retreats as investors sell tech stocks. Same thing right there. It's in the headlines right there within the platform. Venezia, you can trade MT4 account and use the web trader. It's actually the same account. You trade on the web trader, you'll see it on your MT4 or your MT5. Once a trade is opened through, you can't add the AvaProtect. You have to add that on as a feature in the order window when you're first opening the trade. But you could close it once the protection ends and open again with new protection also. All right, so what's the story here? Why are the tech stocks selling off? Does anyone have any idea? Facebook, Amazon, Microsoft, why are they selling off a little bit? There's so much positive momentum about the vaccine. Dow Jones went up, S&P 500 went up, and the NASDAQ pulled down a bit. Why? Any ideas? It's a pretty simple answer, by the way. If you remember what was leading the charge during the pandemic, why the NASDAQ was leading the way up, it was because of the tech stocks. And why? Yeah, Mohammed, exactly. Things like Zoom, right? So all these tech stocks, many of them were doing well because people were working from home. People were ordering things online. Amazon being a big company that sells things online, they were doing great during the pandemic. So was Microsoft and any companies that are dealing with online communication systems, because people needed that. There was a demand for that through the pandemic. Well, what happens now as those assets are viewed as maybe overbought, as the pandemic now looks like it's going to come to an end with a vaccine? What happens? There's a sell-off on those tech stocks, even as the other stocks went up, okay? And so what we've also seen is a normalization now of the relationship between safe haven assets like gold and the markets. Because yesterday what we saw was the markets went up for the most part and gold went down. They moved opposite of each other, which makes sense. When there's positive economic momentum and stocks are rising, usually gold would drop as a safe haven when fear is disappearing. Through the pandemic, gold was rising with the markets. And part of that was the tech stocks were driving the markets up even when there was a lot of fear. And so gold was going up with the markets. And now that relationship seems to have flipped and normalized now, where maybe the markets and gold are going to move in opposite directions once again. So we can go back and we could pull up all kinds of articles from this location. Fundamental news right there at your fingertips. The most recent articles listed first for the most part. And as you scroll down, you'll find older articles. Okay. Now, if we take a look at the headlines I pulled up separately, same sort of news. We just talked about why the NASDAQ is pulling down. Tech stocks are selling off. Facebook, Amazon, etc. Microsoft, not selling off completely now, but pulling back anyways. And so, you know, we can look up here and see Dow Jones is in the green, but the NASDAQ is in the red, right? Very, very predictable when you understand the relationship fundamentally, that the tech stocks are leading the NASDAQ down while other stocks, more traditional type stocks, separate from the tech stocks, are rising, because basically the investors believe the economy will be going back to normal, with people not having to function just online and from home. GBP, I alluded to earlier, had some nice numbers that came out. Average earnings higher than expected. Claimant count, decrease in claimant count, which is positive news, and better than expected there. And then out of the European Union, we had worse than expected numbers on economic sentiment out of Germany. We had worse than expected Italian industrial production. So kind of weighing a little more negative on the euro, a little more positive on the pound with those economic announcements. And then out of the US, not great news. Job openings, okay, a little worse than expected, but not big news, not as of yet. Later today, we do have, in about 38 minutes, FOMC member Quarles is speaking. And so anytime, and later another FOMC member, and anytime they're talking, people listen. You could see some big movements if there's any talk about additional stimulus, which is likely to come in the US. So that's something that could move the markets later today. We could see some big swings, some big bounces, and or breakthroughs based on what the FOMC committee talks about in the US. For anyone who doesn't know, the FOMC committee is the group that determines monetary policy in the US. And their members talk about their fiscal plan moving forward when they have these meetings. And so folks will be listening to see what they have to say. And late night, coming in through the night, you're going to have some big announcements that really could move the New Zealand dollar. Okay, interest rate decision, monetary policy statement, rate statement, press conference, etc. So New Zealand, you could set up for with some pending orders before you go to bed, right? Okay, so obviously vaccine is on people's minds, raises hopes because of the economies being able to open up soon, but it's a logistical headache, right? It's excitement, but now you have to start thinking about the logistics of how long will it take to get so many doses created and distributed all around the world, right? The US created millions and millions of doses in advance, like 100 million doses of each of the ones that were in the trials. And so they have like 100 million or more doses ready for the US population. Now, there's over 300 million people in the US, so that's not even enough for the US, the supply that the US has created. And they've been creating them as fast as possible, just in hopes that one of them was going to be approved. And now Pfizer got one approved. But not everywhere around the world is in even that good of a position, which still isn't a great position because it takes a while to make another 200 million doses, right? And we're talking billions of doses around the world. So what we're looking at then is a logistical headache. So some of this excitement about the vaccine maybe could die down a little as reality hits that it's going to be months away before mass amounts of the population start to be inoculated, okay? Now, Republicans back Trump's right to challenge Biden victory. That's another headline we've got going on, right? That's the type of fundamental news we talked about that can bring unexpected headlines at any time. The markets really cheered, not so much the fact that it looks like Biden won the election, barring any protests reversing that, which there is some possibility of that. It's not over yet, but barring that happening, the market's rising really wasn't in direct connection necessarily with Biden winning, as it was the Republicans looking like they're going to hold the Senate, meaning a divided government, and the progressive policies of the Democrats won't be able to be shoved through with higher taxes, higher regulations, all of these things without a lot of negotiation first, which is the way government really is designed to work. So the fact that it looks like the Republicans likely will hold the Senate, then it forces negotiation between both sides, and the markets really liked that idea, that okay, status quo, they like the lower taxes on corporations in the US, lower regulations, and they expect the Democrats to be happy to push through more stimulus. And so, which the Republicans have already agreed to as well. So that buoyed the markets up quite a bit. Now, that could change in one headline, couldn't it? You want to have your pending orders prepared because there are recounts going on in multiple states. There are lawsuits going on in multiple states, and you just don't know with that many millions of mail-in ballots what they might find, okay? And so it's known that a certain percent of mailed-in ballots typically are not filled out properly, have to be rejected, and the question is, were they rejected already or not? And what are these recounts going to do? So there is some suspense there. Most believe the recounts might help Trump some, but that it's not going to overcome the deficits. And that's kind of the presumed situation right now. But breaking headlines of any type of reversals of any of those states Biden won could shake the markets again. You could see huge movements. So why not prepare pending orders in case that happens? So let's get on the charts then. I'll pull up my demo account here, and we'll take a look at, this is the Dow Jones, and maybe we go to one-day candles, we take a look. It certainly blew by the all-time high and then some, right? Now we're back down. The movement pulled back down to this support level. You can see, and let me get rid of some of these lines off the chart. Quick way to get rid of lines if you don't understand, go to objects list and just delete them all at once, instead of trying to one at a time delete them off the chart. Okay, so this was a resistance level that broke through yesterday, okay? This is yesterday's climb, broke through this resistance here. And for those of you that are new, resistance is a spot in the prices on the chart where it hits and drops, okay? It hit and dropped in the past. Now it hit and broke through. It had a lot of momentum. Obviously, you could have had a buy stop waiting at this price level up here, knowing that that was resistance and it would take momentum to break through. It happened yesterday. It broke that resistance line, and there's your breakthrough candle, which is what you get many times when fundamental news creates enough momentum to break a resistance line, especially a resistance line that's on the one-day candles and represents an all-time high. Okay, so it broke through with a lot of momentum. Now it pulled back. Look at where the price is right now. It's on top of the old resistance. What do we call an old resistance level that's been broken and the movement is now above that resistance level? When the price comes back down to that level, it acts as support typically. Okay, so it's sitting just above that old resistance level right now, teetering just above it. Okay, so if we zoom in and say, okay, 30-minute candles, maybe a move here that would make sense would be, here's the big breakthrough, the big climb, here's the pullback. Let's say you believe that the markets will get more momentum and push back up towards 30,000 again on the Dow. Okay, so fundamental news is on your side right now. There's positive momentum on the markets. And your entry point, technically speaking, is advantageous here because it pulled back from the high and it's getting there. Here's that support level that I drew right here. That's that one-day candle support level. This red line, if I go back to one-day candles, that's this red line that I drew right here. This is the old resistance on the one-day candles, which broke The movement broke above that, and that's where we are here, just above that price level. So when I go to 30-minute candles, now I say, okay, this is a support level that I expect if it does break it, that it'll probably bounce back above and maybe run up. So you could do a market move here, and if you chose to do that, then we'd be looking at Dow Jones. Let me pull that up. Okay, one lot is 10 indices, so maybe I do one lot or a tenth of a lot, because the Dow can move a lot of points in a short period of time. My keyboard is not cooperating with me. I can't get a period. Here we are. So we'll do 0.05. Note to self, check your keyboard before doing a session. Okay, so 0.05 for the lot size. And what I'm looking at here is if I did a market move, where would I want my stop loss to be? And so as I'm looking at this, I say, here's the old support level. If I get down below this wick right here, then it would have to break back below that support level to hit my stop loss. And that would be a limited risk move, okay? Kind of a scalp move where I'm not putting my stop loss all the way down below this big spike, but I'm putting it just below the first support level here. So if I put my stop loss at, say, 28,990, and I put my take profit back up towards this high point here, okay, which is about 29,300. This is a nice little scalp move, hoping for a bounce off of that support level. So my take profit is here, just before the first resistance level. My stop loss is here below this support level, okay, just below the support level. So it's about an equal risk to reward on that. Good question. Someone's asking, is it better to use MT4 or MT5? They're 99.9% the same, okay? Different programming language. So if you're using auto trading robots, what they call EAs, it has to be programmed. If it's programmed for the MT4, it won't work on the MT5 or vice versa. But for manual trading, there's very, very little difference. You might see some small features that were added to the MT5 that are different, but for the most part, vastly the same. Okay, the main difference you'll see with AvaTrade is on the MT5 platform, we've got a lot more in the way of stocks. Okay, and I can show you if we go to the AvaTrade website and go to trading info, financial instruments, if you go to the list of stocks, okay, you'll see the first few pages, they're on MT4 and MT5, all of these stocks that we offer. But as you get to the fourth page and on, you see it says MT5 above Starbucks. That means it's not on the MT4, it's only on the MT5 because it says MT5 above it. And as you go through the rest of the pages, you'll find other assets as well. Medtronic, only MT5. And then as you get further along, you'll see hundreds of stocks that are listed only MT5. Charles Schwab, Kinder, on and on, okay? Look at all of these, just say MT5, 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 and you see 62 pages of stocks. So from page 7 on, for another 55 pages, it's all stocks that are only available on the MT5, okay? So we don't have any commissions with our trading. Good question. No commissions, only spreads and overnight interest, which all brokers have. And our spreads really are as tight or tighter than brokers who are actually charging commissions on top of their spreads. So I don't think you can find a broker with better prices than us when you factor in no commissions at all on any of our assets. So you can see right here on this page, the spreads, they're listed. Here's the typical spread. Here's the live spread. And if you click on an individual asset, you get the overnight interest rates, okay? Overnight interest right here. Buy and sell, we're paying you interest. If you're selling on the Euro USD, you see with positive interest, we're paying you. And in the opposite direction, you're paying interest, okay? This is the way it works. Our fees are very fair. In some instances, if you qualify for VIP spread reductions with larger balances, you're almost trading for free with absolutely almost no fees. So let's take a look then back at the charts, and we see a move here that was based on fundamentals and technical, right? So no, we're not just for options trading. We have an options trading platform, but we have also the MT4, MT5 Forex CFD trading platforms. Good question. Those of you who aren't familiar with options trading, it's a completely different style of trading than CFD Forex style trading, but it's also offered by AvaTrade as well. So we're starting to get our bounce here in the direction of the fundamental news from a nice technical entry point, this red line being a one-day candle support, okay? Those of you that are wanting to see the options platform, you can add it to your existing, log into your client area from the main website, and you can, from your My Account section, add an account. And you can add an options account. Here's Ava Options. Right on our website, there's the app that goes with the options account. Makes it very simple. And you can learn all about options right here on our website. And obviously you can Google and read about it as well. But the app teaches you about options. It teaches you the strategies and has templates for it. Okay, so you'll have to check different regions around the world. We don't offer every feature and every option. So if you're in Canada or someplace else, just double check on your website. Take a look at the different platforms that are listed and see if Ava Options is listed or not in your location. So remember I talked about scalping, right? An easy way to scalp. We found a one-day candle support, right? A support level that's from one-day candles, which means it's been there a long time. Once it broke above it, it should be pretty substantial to hold. And it took a lot of momentum. Look at the size of this momentum here. This candle, it took to break above this one-day candle support level. And so no wonder it's bouncing. And we can say, okay, I'm a scalper. I just made $8, right? Bouncing off that support level. That's the power of knowing the fundamental news and doing your technical analysis and putting those two things together to get a bounce off of a support level from a strategic entry point that was maybe easy to predict. And I expect this will keep bouncing up to this resistance level up here, okay? Let's take a look at some other assets. We can look at maybe gold, see what's going on with gold, okay? As I alluded to earlier, when the markets went up, gold dropped. Finally, a normal relationship. Now that the pandemic is viewed as maybe turning the corner with a vaccine, now things are starting to normalize a bit, whereas markets went up, gold went down. And that's usually what we would expect to see. You know, as fear went away, gold dropped this time. So if the markets continue to rise, there could be some bearish momentum on top of gold, even though gold tends to rise near the end of the year. Don't get me wrong, gold could still go up, okay? You know, there's an idea or a philosophy called the January effects, where gold near the end of the year a lot of times will push up as people sell out of riskier assets at the end of the year. But you have to keep in mind, this is not a normal year, and be ready. If you're buying on gold, be ready with your risk management in case it drops like it did yesterday, right? Have enough in your account to re-enter at a better price if you're sticking with that same idea still, okay? So the idea is be prepared with proper risk management. Don't blow your account on a movement like this. If you were buying on gold and it plunged, why would you not have a sell stop right here? Look, there was a support level, right? Support. We didn't know that news was coming, but what kind of pending order just below this support level could you have had sitting there just in case the vaccine was announced at some point and gold was going to plunge? A sell stop pending order. Very simple to set up. You switch from market execution to pending order. You put the price at which you'd want it to sell, which is a sell stop if you were programming it for a lower price. And let's say I put 1865. Okay, so there's my pending order. You see the green dotted line down here. I could have done that up here before the big plunge yesterday. If I had a sell stop here, look how easy of a profit that would have been. Now, why would I put a sell stop down here? If it breaks this little support area that it built, it might drop then to the low point of today. What if a headline breaks that's positive news again and gold drops further? You might not even expect that to happen, but you can have a pending order down here just in case it does happen. Okay. Hassan, I'm not sure what you're asking. TF? What TF is this chart? Oh, time frame. 30-minute chart I'm on. 30-minute chart. So this was dropping by the half hour, this huge distance each half hour. Okay. Huge plunge in gold yesterday. Obviously, we all understand what happened with the vaccine announcement, but that's where your pending orders, I call them trip lines in the market, you can have them ready and waiting. Okay. Couldn't I also put a buy stop up here? If this breaks above this resistance level, there's not another resistance until it gets way up here. So I could put a buy stop right here. If it breaks and hits 18, let's say 92, could be in for a ride up. No guarantee, but why not be ready just in case? So I can bring up another pending order. Buy stop, buys from a higher point. By the way, the pending orders in the AvaTrade Go app and the web trader, you don't have to pick buy stop or buy limit. It can get confusing. You can just say buy from and put the price that you want. It'll make it the right type of pending order automatically in the AvaTrade Go app and the web trader. But let's say I want to buy from 1892. And some of you might be thinking, why would you do that? You're waiting for it to go up to buy, and you're waiting for it to go down to sell. And the idea is you're waiting for a confirmatory breakthrough to show momentum before you get in with this type of strategy. So I might say if it hits this price up here, okay, and you see I can slide my entry price. If it hits this price up here, maybe I'm convinced that there was large momentum and this rapid drop could be reversed. And then if it breaks this support level down here, maybe I'm convinced that it's going to have momentum to drop further. Okay. Good question. Mohammed, a buy stop buys from a higher point like I did here, where I'm saying if it goes up and breaks this resistance and hits this price, it'll buy. Buying from a higher price than it is now. It's a pending order waiting to buy from a higher price. A buy limit would be if I programmed it to buy from down here, buying from a lower price than it is now. Okay, so in that effect, you need to know buy limit or buy stop. Am I buying from a lower price than it is now with my pending order or a higher price? Again, with the web trader platform and AvaTrade Go mobile app, you just tell it the price you want to buy from. It'll make it a buy limit or a buy stop automatically. Oh, easy. I didn't put my stop losses, but I could have. So let me go to my buy stop. And you just put the stop loss. So if this is my entry point on my buy, then it's only because it broke above the resistance. So if I buy it from up here, I expect it should not drop back below that resistance, because if it's a true breakthrough, it should have momentum and keep climbing. If it breaks through, triggers my buy, but then goes back below that resistance level, then I want to get out, theoretically. So maybe 1889 would be my stop loss. And my take profit up here at 1932 maybe. So you can see the risk reward on this. My potential risk is relatively small, okay? It enters here, it gets out if it drops back down below that price level. And my potential profit before the next resistance is way up here. It's like 5 to 1, 6 to 1, 7 to 1 potential profit to risk, depending where I put my stop loss. If I want to be a little more patient with my stop loss, I slide it down just a bit, okay? Still, that risk is a lot less than my potential profit up if this plunge gets reversed. All it would take is the reverse headline, right? What if all of a sudden they say, you know, the Republicans aren't going to hold the Senate in the U.S. If all of a sudden it looks like the Democrats are going to run the House and the Senate and the presidency, and now fear hits Wall Street that, ooh, that means raised taxes, that means higher regulations, and you could easily see with one headline this break through and have momentum back up, just like this broke through up here and had momentum down. So you prepare trip lines, especially when you know there's the potential for big news. Okay, that's the idea here. Using the fundamental news as you know it to maybe scalp the market like I did. I gave you an example of the Dow Jones bouncing. And then also use the unknown fundamental news to prepare just in case something happens. Okay, how far your stop loss should be away, how far your take profit should be away, that's a personal decision. Some of you are asking. It depends how aggressive you are with your trade sizes. The larger the trade size, probably the closer your stop loss needs to be, or else you could blow your account. If you're going after small trade sizes, you could have your stop loss further away and be more patient without risking too much. So if I wanted my stop loss, not just when this breaks through and triggers a buy, if I want my stop loss not just below one support level, but below 2 or 3 support levels, right? I could put my stop loss down here. I still would only be risking about the same as my potential profit. My risk now would be about the same as my potential profit on that trade. Now I'm less likely to have it come down, hit my stop loss, and then go up. But now I have to risk more or take a smaller trade. Okay, so there are different philosophies with that. Larger distance to your stop loss, you can be more patient. Shorter distance to your stop loss, you tend to be able to take larger trades. Okay, and that's a personal decision within your trading strategy, what you're going after. Okay, very good question. Let's take a quick look at the NZDUSD since there's some big announcements coming, and the EURGBP, and then we'll call it quits because we're near an hour on the session already. EURGBP, we saw negative news out of the European Union economically, and positive news, relatively speaking, out of Great Britain on those economic announcements that we looked at. So you can see over the last couple hours, the euro is pulled down against the pound. But for the most part, it's up today. The euro's up today. So this momentum could continue with the economic news that came through. So we see the euro being pulled down overall quite a bit. And so if we go to 1 hour candles, we can see on the day, I actually was looking at 5-minute candles, I think there, and now I understand better that we were right. The euro was pulled down against the pound today. You see it. And we understand why that happened, right? We looked at the economic announcement schedule and we saw kind of bad numbers, worse than expected came in out of the European Union and better than expected came out of Great Britain. So this was the movement we would expect. This was the correction over the last few hours. And then we see, could this continue to drop? And the momentum could be there. So if you say, okay, I'll take a shot at selling on EURGBP because it's going with the fundamental news, and you say, but I don't want to risk too much, you could go above this one little resistance point here. It pulled back and it dropped. Okay, so we can go in and say 15-minute candles. If it breaks above this high point, then I'll admit we're wrong, right? So risk up to 89.44. So stop loss just above the resistance level there, and the take profit just before today's low. So let's say 88.90. Okay, so I'm risking a little less than my potential profit. And all we need to have happen is that the movement retraces what it already did today based on the fundamental news that we already know. Okay, so there's two things at play here, Cindy or Bakker. There's two things at play here. There's positive fundamental news out of the European Union, which pulled the pound down, or I'm sorry, negative fundamental news out of the European Union, which helped the pound pull the euro down. And there was positive news out of Great Britain. So those two working together created this dramatic move today, downward for the euro against the pound. And so we started out with that trade size with what, $15 negative from the spread, and we've already covered the spread just like that. Now we're into the positive. So again, if you're scalping, taking advantage of the momentum while it's there, and get out before the news can change, right? Ride the wave before the next storm comes, get out. That's the idea of scalping, of going after short-term movements. This one, we could just let it play out. Maybe the news won't change much. See if it can drop to the support level with the fundamental news as we know it before it reverses and breaks above this resistance. Okay? Or you could play it as a scalp and collect your few dollars profit already. So someone was asking for NZD, and we'll pair it against the USD. So big announcements in New Zealand tonight. Really big announcements coming. So we could set up for that with pending orders, right? If the news is bad for the New Zealand dollar, then likely the movement will break this support level. And if the news is good for the New Zealand dollar, likely it will break this resistance level. So you could simply set up a buy stop here, somewhere up here where you're convinced it's good news for the New Zealand dollar, and you could set up a sell stop pending order below the support level, where if it broke the support, then wow, it must have been bad news for the New Zealand dollar. Okay, trading the gap is a different strategy. We haven't covered that today. The idea of trading the gap is if a price gaps, if a movement re-enters the gap, then it tends to be able to fill that gap without reaching any new resistance or support. And I know that sounds pretty abstract without looking at an image. Perhaps the next webinar, Thursday this week, if you can make it back, ask me earlier in the webinar and we'll take a look at a gap or two, and I'll show an entire strategy or two around trading the gap. Okay, very good question, Sandu. Okay, great. So someone's asking what's the news out of New Zealand. I'll show you. If we go back to the economic calendar, you see here, interest rate decision, monetary policy statement, press conference, all of this coming tonight out of New Zealand. So we talk about placing trip lines in the market. You could put a buy stop up here, a sell stop here with your stop loss back to the other side of those price levels. And if it breaks through and runs, you could have a great profit. You're only risking a little bit if you enter after it breaks through and put your stop loss back on the other side of those price levels, because you could see a big breakthrough. Now, where would you take your profit? You could take it at the first support level. So here would be the first support level. If you enter on a sell stop, you could take profit here. And we have to go to larger candles. If you enter on the buy stop I don't see a resistance level anywhere in sight on the 1-day candles. We have to go to 1 week, and it would be up here. Okay, quite a ways up, 0.6926. So that would be quite a haul if it breaks through on a buy stop and reaches that level. Okay, so really some nice risk reward potential here with the New Zealand USD pairing. Mohammed, good question. You can see that as I'm looking at price levels, like when we looked at the NASDAQ, I had to look at 15-minute candles to see where it was now in terms of the small candles. And then I had to look at the 1-day candles to find where the next level was. And I found, wow, that little level that it was sitting on that looked like a small support level on the 15-minute candles, that actually, when we looked at 1-day candles, was a resistance level that had broken through yesterday, that had been there for weeks and months. So that was a really important price level. That's why we expected it to hold better and took a buy off of that support level, because it was there on the 1-day candles as well. The longer a price level has been there as support or resistance, usually the more significant it is. And so I call that taking an inside out look or an outside in look before you make your trade. Zero in on the small candles to see what's happening more intricately, and then also back out to the 1-day, 1-week candles and see the bigger picture. Okay, and you might get new perspective about the importance of particular price levels as you do that. Okay, everybody, thank you for all the questions. I think it was quite helpful for some to have some of that information pulled out with the questions you're asking. So it's very good input that you're adding to the session. So keep it up with the questions and the participation. It really helps, especially beginners who don't know what to ask. And then you ask something and it helps others. So thank you for participating, and good luck with your trading this evening. I really think you can find some great movements on the major indices, on gold, and on some of these currency pairings as well. All right, everybody. Bye for now. See you on Thursday.